Welcome again, Market Vision Short Takes. This is Deepak taking you through DLF. What happened to DLF? Conversation with Ramki last month, approximately end of February. We had a chat, and I think that was when DLF was around here. That DLF is going down. It's probably going to go all the way to 185, and that would be the right point to buy. But the stock obviously has recovered a lot. You can see that it has moved significantly since then. What happened and what could we have done to prevent it? Now, a few interesting technical factors here is that if I zoom in on the particular on the stock itself, DLF. So after the end of February, which is when we started talking, it was around here. It created a base. First thing it did was cross a 20-day moving average. Again, not significantly bullish because the stock itself has not really used the 20-day moving average as resistance, though it has. There's been some attempts to go above, another attempt to go above, but here it breached that. But each of these times it never breached the 50-day. But on pretty huge volumes, it broke through the 50-day as well. So that's a sign that says, well, this stock isn't probably going down. But the same day that it did that, the very same day that it broke, kind of the same day, the day after or something like that, it did it on huge volumes. So let's just take a look at this, the different data points. You had huge volumes, you had an MACD crossover above zero, so this is approximately here as well. So you had an MACD crossover. The blue line crossing over the zero line is positive usually, and you also had a past high kind of being met or broken. So if I drew a horizontal line over here and say the past high, well, the closing high was somewhere around here. Now I need a horizontal line. Okay, here you go, approximately here. The red bars which is above is simply the fact that the stock actually opened above but closed below. So you also have the stock closing above a last significant high. Remember, on a downtrend you typically have lower highs and lower lows. So you see this downtrend approximately, there was a high, there was a low, there was a lower high, there was a lower low, there was a lower high, there was another lower low. Well, you'd probably consider this as, okay, something strange happening over here. Again a lower high, again a lower low, and so on. So that's your downtrend typically happening. You would see a violation of a downtrend if you had a higher high. So around this region you started seeing higher highs. I mean, the stock starting to move higher. It's not made a lower low. The low was again a higher low here. So you start to see a repeal of the downtrend. So around the 247 250 area is when you might have wanted to take a long position. Honestly, I took on a little bit, a very tiny position over here at the 250 mark, actually a covered call position. The idea being that it would go higher, and in the March expiry it did end up higher at this just beyond this point. And of course there's a position I'm continuing to hold for the April expiry, so there is obviously some disclosure element here. But what's interesting is that the stock is kind of tapered around here, and I would start to look at another piece of technicals here, which is the retracement. So if I cleared everything, and I looked at this, where can the stock go next? So let's look at the next significant support point, and I will just change the color so that we are looking at something that's just bright enough. Oh well, I'm sorry, that's the wrong color to apply. We would like to say the next color is something that's of a lighter range. So if we looked at something like this, now if you notice that this is your support line, which is basically the stock bounced off of on the way down. So it's going to bounce away from on the way up, and it's turning out to be some level of resistance here. It's about 275. You notice that there's nothing significant in the past, but there was just one bounce level. I'll just see if it showed anything significant in the past. No, well, there's a small bounce level here, but it's too far away for us to care about. What is interesting is that this bounce level is where you might see some resistance. That's one point. Let's also look at, say, a Fibonacci retracement from the recent high and the recent established low. The 61.8%, this thing shows a ton of stuff, but 61.8 is where you want to really look at. That's 279. So 275 to 279 is where you should see some resistance, a bounce back. If you want to go short, you might want to go short here with a very sharp stop loss of say 280, 281, saying that okay, if it goes to 280, 281, it's broken all these technical details and it'll break back down again. So that's the idea. If it crosses 281, I would say, this is your next level, 325. So this 300 and 325, there's just two levels, two interesting, good, nice round numbers to work with. So if it really broke 280, I would say 300 is a targetable long. I'd be careful also. So if it don't go to 281, I probably have to exit my position. I'm still in reasonable profit, so not. Again, it's a small position. It doesn't matter much to me right now. It's just something that I've set up just to see if this concept works. Thanks to Ramki, I started to learn a little more about ratios and concepts like this. Let's see how it goes. Let's say, idea being short for, you might want to go short. If you want to go short, this is the level you might want to go short at with a stop loss of 281. If you're long, you want to make sure that in the next few days it actually goes to 281, otherwise get out. Thanks for listening.